Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity you have, your attention. Promise to do my very best to give you a return on it. All right, let's go to the charts. All right, starting out as always with the S&P 500. Remember, the market is going to be closed on Monday because the market is like teachers and firemen. It hardly ever has to show up to work. All right, so we are tapping on the door here of all-time highs. The S&P is up about 1.5% for the week. That white line right there is the all-time high, and we are just tapping right on it. We fully expect this to go to all-time highs in Q1 of this year. Don't know if it's going to do it next week. I mean, this is a pretty bullish looking chart. I mean, we have each of the moving averages is in sequential order. The technicals are getting pretty stretched here. I mean, high RSI, high MACD, high stochastic. Another thing, I'm leaning towards the downside on this, and the reason is because the dollar is looking pretty strong. It's looking like the dollar is going to move up, and if that happens, it'll take fewer dollars to buy the same share in the S&P 500 or an ounce of gold or a barrel of oil. Looking like the dollar is going to hit some resistance around 103, and then possibly again around 105. So sees a little bit of upside for the dollar here in the short term. But in the long term, we fully expect it to get down into the 90s. Gold is down a tiny bit. It's hitting right in the Fibonacci here. So it's essentially even for the week. Yeah, kind of right in this Fibonacci right here. Let me get rid of that now that you guys know where it's at. It's got some support right here on the 50 moving average, which would be around 2020. And then it's got quite a bit of support right back here on the 200 moving average, which would put it around 1980 or so by the time it got there. In the immediate term, it looks like gold is going to go down for the short term, but we got a lot of support right here, and then would love to see gold get down into like the 1950s. I think that would create some awesome buying opportunities for gold stocks if it did. But in the short term, we expect gold to go just down slightly. Franco-Nevada got another opportunity in this one. If you guys caught it on Thursday, it got down into the 105s, possibly even touched the high 104s. We didn't get any more. We're actually watching it this day and contemplated it, but we got enough back here, doubling our position. We're pretty happy with Franco-Nevada. Remember, if you don't have any of this, fair value right now, we believe is around 125, 130. So, we think there's a lot of upside in this one in the best gold royalty company on the planet. Barrick Gold, we bought some week before last. There was another opportunity on Thursday. Daniel picked some up right here, hit right in the 200 moving average, then bounced off the 50 and then shot up. So hopefully Barrick acquires First Quantum down in Panama and gets that up and running. If they do, Rick believes that this will probably get sold off, and that might create another buying opportunity in Barrick Gold. Gold Royalty Corporation, not that it has to obey this trend line moving up, but it seems to be. And yeah, still got our limit order in here, down for $1.20. It's probably not going to hit, but place it anyways, just and hope it does. But Gold Royalty Corporation looking really good. Origin Royalties, we got this one from one of Rick's boot camps. We got a stink bid in here. This is going to be our final purchase if it hits at 45 cents. We're pretty comfortable with our position here. They're going to have some income coming in here pretty soon, and we think that this Gold Royalty company will do pretty well. Made another purchase into Go Gold. We got this one back at $1. Closed the week at 94 cents, and we hit an order at 93.61. We got that on Tuesday. So if gold does well, this one should do quite well. And so that's gold. Silver essentially was flat for the week, although pretty volatile. It got down into the 22s and closed the week at 23.33. Would love to see this get back down into the 22s, and if the dollar gets stronger, that's probably going to happen. So 22 would line up very nice with this back support right here. We expect it to get back down into the 22s, and if it does, we will very likely place a leverage bet using SILJ to maybe make some type of swing trade position on silver. Looking like SILJ is going to come back down. We got a bearish reversal bar to the downside, hit through the 200 moving average, and then crushed back down. Copper closed the week slightly down, closed at $3.74. Daniel and I talked on the phone, and we were looking at the charts for about an hour on Monday, and we were contemplating putting a trade in on copper. And after I hung up the phone, I thought, you know, that might have made for an interesting episode, just the two of us analyzing a commodity and then a stock for about an hour. You know, if that interests you guys, it reminds me of when I had the poker podcast and me and my partner on the show would talk about one hand of poker for an hour. That's kind of like what we did with this. If that interests you guys, put it in the comments below, and next time I'll just hit record and you guys can watch how we walk through the technical analysis on this. The way we would have played it was here Monday. See how this is above the 200 moving average. If this bar on the right was slightly higher above the 50% mark, that would be pretty bullish for the metal. This is the futures right here. We would have placed it on COPX because this is a leverage bet to copper. If you go and compare and contrast these two, like this December 13th to 14th move right here, on COPX it moved about 8%. On copper itself, on that same December 13th to 14th, it only moved about 4%. So it's a nice kind of general 2x leverage move to the up and downside. But we weren't placing a short or anything. We were hoping it was going to go up, and we would have placed that trade if this bar had gone above the 200-day moving average and the one in the metal itself had a reversal bar to the upside. You know, if the commodity moves, this is going to move a little bit more up or down. So we didn't end up making that trade. Looks like we could have got something in here on Thursday. We had a nice reversal bar to the upside with a kind of a 2B bounce here, some back support right there, but we never did it. All right, Arizona Metals closed the week at $1.60, down slightly. We think, and Peter thinks, the floor on this is probably 150, 155, pretty much where we're at now. Looks like there's going to be a little bit more selling on this early next week. We'll see how that irons out. But if copper does well over the next few years, this stock is likely to do very well as well. Uranium, this is on everyone's mind. Completely amazing. It is up 12% for the week. So we started the week at $93, closed the week at 104. And the Sprott Physical Uranium Trust, pretty incredible. Up over 6% in one day as the commodity itself moved up. We sold a little bit and put this into some gold developers. Maybe we should have waited a little bit because they essentially went flat and this one shot up. So we'll see how that works out. I'm going to show you guys the Sprott Physical Uranium Trust website, and we are at a slight discount here at 6%. But look at what happened. Last week, this number was a 1, and now it's a 2. We added 100,000 pounds to the Sprott Physical Uranium Trust. Unavailable to the utilities. It is ours. They cannot have it. Just stacking that uranium. They don't need to stack anymore, but we are grateful that they are doing so. One thing to remember when you guys are taking profits in this, if you've decided to do so yet, remember to specify and sell the shares that you've had longer and not the ones up here that you've had shorter, because these ones, if we sell these, we got to pay 30% tax. If we sell these back here, if you're an American, you only got to pay 15. So sell your older ones first, pay fewer taxes because you have long-term capital gains instead of short-term, and then you pay Uncle Sam less, which is always a good thing to do. URNM, we're just going to kind of click through these here. Heck of a move right here. We talked last week that, you know, if you don't have any position in uranium and you want one, this is a pretty easy beta way to play it. It shot down after they paid their dividend. We had about a week here where you could have got a little bit more, and then look at what we did. Just rocketed up to the upside. It went from $27 up to $31.48. URNM basically did the same thing. We took some more profits in this. We put this into Barrick Gold, and I think this blue one we put into Treasuries, if my memory serves me correct. Should have held on for another 5 days. That would have been awesome, but we did not. Slowly taking profits in this, and we're going to start slowly rotating it into gold. We hope in the next, maybe by springtime, to be completely on the house's money in uranium. We are above that $100 mark now. I think if you haven't taken any profits and you were like us and you started buying around $40 or $50 uranium, now it's over 100. I mean, you got to double in the commodity itself. I think this still has a ways to run. We're going to have Justin on the show in about a week and a half. This must be some institutional buying because, I mean, look at this, URNJ up 10%. So we got this cup and handle pattern right here is starting to play out, shot up above that in 1 day, up 10%. We had our last purchase in here for $22.67, and this was basically it was the ETF's mistake. They bought Kazatomprom and then they had to sell it the next day, and they had radical selling on this, and we took advantage of that and bought it, and you know, from there to there is what, 25% or something. That was pretty cool. I'm very curious to see what happens on Tuesday with uranium, if we're going to have if it's going to fill this gap or not. It'll be interesting to see. But with these cup and handle patterns here, what we can do is we can measure the move right here from the bottom to the top, and we got a move of a little north of $11. And so if we take the top of the cup and move it up, then that should give us about a measured upside target. We'll put it, what is that? Yeah, around $36, $37 is kind of where that cup and handle should iron out. So we'll see. UROY, this is our favorite one in the uranium space other than UEC. These were our back up the truck moments right here. And we made another purchase, about 5% of our holding right here. Really wish we had bought more, but we didn't. Our limit order finally hit for 250. Remember, we put our limit order in for 250 back around here when the cup started forming. We've almost broken out of this cup and handle pattern, and you can do the same thing with this, just measured upside target. I did it before I pressed record. It was about $1.50. So from around $3 at $1.50, should cup and handle pattern should iron out around $4.50. Love this company. I think there's going to be a lot of money moving into this, and we got our positions now. Probably not going to add any more, but just glad we did on that last pullback. Okay, Energy Fuels also had a nice bump, 8.5% in 1 day. I mean, pretty incredible, hitting around the 200 moving average and shot up. Encore Energy, we closed our position in that. We had it for about a year and a half or so. I think we made about 40 or 45%. You know, again, I guess we wish we would have held it for a few more days, but whatever. We ended up putting those into some gold developers. UEC, this is just our little darling here, up 12% on Friday. I think we're going to need to start taking some profits in this thing. I mean, when we look at our last bet here, I mean, this is up, what is that, 175% or something. We might be moving to the point of no concern on this one fairly soon. We'll see. Boss Energy here, also a double from when we got it after the Rural Uranium Boot Camp. Just pretty incredible. I think Justin called it a couple months ago when he said that now is the time to start moving out of the physical uranium and into the juniors. I think the juniors are going to do pretty well in 2024. We'll see if we're right. Here's Global Atomic, up 12% on the day. The top performer so far is Uranium Royalty Corporation, or at least the ones we track. The Global Atomic's knocking on its heels at 12% in a day. We got this one back when it was the coup in Niger, and then we sold our to get back our initial investment and pay the capital gains tax, and we're just in this one for free. So we'd love to see this go up to like $300, although that's probably not going to happen. Next level of resistance for this one is going to be around $3. Natural gas. Natural gas had a heck of a week. It's up 15% for the week. I guess, excuse me, I guess people are turning on their heaters. But Devon Energy actually went down, although natural gas went up, setting up an interesting possible trading position or even entry point. If you don't have anything in natural gas, this looks like a pretty good time to get it. We've got a limit order in here for $42. We hope it hits. Don't know if it will, but that's a neat beta way that you could play the natural gas sector. Oil. Oil's kind of sideways for the week, looking like it's probably going to go down a little bit. We had some orders that we placed. XLE, one limit order hit, and then we placed another one down here for, what is that, 81.44. We had a limit order, I'm sorry, the limit order didn't hit. We had a limit order in for 81, and I was watching this on Wednesday, and it didn't look to me like it was going to hit that, and it didn't. It came within like 25 cents of it. So I just did a market order and got it at 81. What did I get it at? 81.44. And all I'm looking at here is, look, stochastic is low, MACD is low, RSI is relatively low. Ideally, we like to see it below 30, but you know, it got pretty low, and I think it was a pretty good purchase. I think oil's pretty cheap right now. Also made a purchase in on Exxon, and again, not super scientific, just kind of a triple bottom here. We got one there, 2, and 3, and so we got it at in the 98s. We got it at 98.28, and yeah, like Exxon a lot. Great dividends. Keep them coming. Coal. This is thermal coal. Closed the week at 127. We're waiting for it to get down around 120. We need to schedule Matt Warder, pick his brain on this. And met coal closed the week at 332. Ballpark that we're looking for is going to be around 250 or so. So we'll be watching this. Orders that we placed on coal. Oh, you know what? We did take some of the Sprott Physical Uranium Trust and we turned it into Glencore as well. I forgot about that one. So it wasn't only gold developers, it was coal as well. So we had 2 limit orders hit last week. Whoops, let me move that back. There we go. And again, not super scientific. It's just a retracement, you know, 50% and 61.8. The values are already in Trading View. And so you can, you just click the ones you want. And the ones we like are 50% and 61.8, and both of them hit. So this one hit at 11.43, then this one hit at 11.28. So we got them, hit right on the 200 moving average and then bounced up. Looks like it might be following this 50 moving average. And then we got a stink bid in down here for 10.78. And again, not super scientific. It just lines back up with this back support right back here. So hopefully that'll hit. And you know, as these limit orders are hitting, look at the technicals down here. Low stochastic, low MACD, kind of the middle of the road RSI, but this doesn't seem to get super low RSI. So for Glencore, that we thought it was a buy, and so we bought it. Bitcoin had some big news on the week. Their ETFs got approved, and so it shot up and then just S the bed and went right back down. So got a little bit of hate mail last week from Peter Greenwich and I poo-pooing on Bitcoin. I'm pretty biased, you know. I mean, I got one Bitcoin 10 years ago for $450, and I turned that into the truck that I'm driving today. I call it my Bitcoin truck. So it can go to zero tomorrow. It doesn't owe me a dime. But yeah, I keep going back to, like, would I trade 22 gold coins for 1 Bitcoin? I would just never make that trade. You know, I want this to iron out to something that, like, makes some kind of sense to me, and it just doesn't. You know, I mean, this is just completely in the clouds. But you know, who knows? The tulip mania could go on for quite a while. I understand the fundamentals behind Bitcoin. It's essentially digital cash, and you know, like when you buy a house, you got to have an escrow account to make sure that you're actually sending the money to the right person. You would hate to send $1 million to the wrong guy, you know, buying a house. So that's why you got the escrow company, and you pay them as a third party to take hold of that cash and then give it to the right person, right? That makes sense. With Bitcoin, you don't need to do that. You can, both the buyer and the seller, they can memorize 12 to 24 words, and that's your key to getting access to your I'm doing air quotes here, cash. But I mean, governments are starting to regulate it, which kind of undoes the whole point. There's a lot of people that got in super early on this, and so there's relatively few people that own like 80% of the Bitcoin. And if you've traded this for US dollars at any point, which most of us have, then that kind of negates some of the value and it allows them to track it. I think the whole reason I got into this thing is because it was finite, and there's only 21 million available. And you could, I really liked the idea of digital cash, and I was using it a lot on poker sites. I didn't have to pay any taxes. Probably shouldn't say that on the air, but it was incredible, and that has completely gone away. So my reason for holding it has gone away. And I've turned that digital thing into something real that I drive around every day. You know what I'm saying? Like, I think that the whole game with this and with all these stocks is to turn them into something. You're owning fractions of a company like Glencore. When that does well, take that and turn it into something real, whether that's an ounce of gold or whether it's an acre of land or whatever it is that you want, or 6 months of food supply, or maybe a generator in case the power goes out. I think that I'm a bit of a prepper, and I just don't see that. It doesn't make sense to me that I would trade $44,000 for one Bitcoin. That just doesn't compute. Okay, I'll get off my soapbox. All right, moving on to platinum. Platinum's come down, coming across some interesting support. We got quite a bit of support right around $900, and then we had a stink bid in down here. I'm sorry, we didn't have a stink bid, but if you want a stink bid around $850, that's looking pretty good. Palladium is also just dropped out of the sky. Is below $1,000 right now. Got quite a bit of support just north of 900. The way we played this one last week was we bought a little bit more position into the SPPP. So this is the Sprott Physical Platinum and Palladium Trust. Like this one a lot. We just need a hiccup in Zimbabwe, Russia, or South Africa to the PGM metals supply, and this thing is going to skyrocket. So if and when that happens, this fund will do very well. If it doesn't, then you're essentially going to pay every year to hold it. All right, TLT, kind of flat for the week, looking like it's just kind of bouncing right along this 200 moving average. A little bit of selling pressure. So in other words, when this chart goes down, the yields are going up. When this chart goes up, then the yields are going down. So we're waiting on the Fed to pivot here. I'm going to share my screen here, and we will go to the CME Fed Watch tool, and we can see that on January, 95% of bond traders believe that the Fed is going to continue to pause, and then after that, all bets are off. March, they think, is going to be their first cut of 25 basis points, and over more than 3 out of 4 traders think that's going to happen. Jerome Powell said that they're going to cut 3 times in 2024. The market said, you know what, we'll double that. The market thinks that they're going to cut 6 times in 2024. We tend to believe the market over Jerome Powell, although over the last few years, the market has been wrong and Jerome Powell has been right. So take that for what it's worth. This is also an interesting one. 30-year and the 2-year Treasury yield has finally uninverted. Okay, so that's just one of them. It's not it's not saying that we're entering a recession now, but as we exit clown world and the yields on these start to make more sense, right? The government should give you a higher yield for loaning them your money for 30 years than they should for loaning it for a shorter period of time, like 10 years or 5 years or 2 years, right? Well, right now, short duration debt is paying longer, or is paying more than longer duration debt. And one of these has finally just notched itself up slightly. And that's the 30 and the 2. All right, moving on to listener questions. Okay, so remember, put the full company name with the ticker. It saves me a lot of time, and then I know which company you're talking about. Also put the exchange. You know, some of these trade on only the Aussie exchange, others only trade on the Toronto Stock Exchange, whatever it is. So make sure you put in the the full ticker. And Elena wants to know about Fuse Minerals. She says they got some exciting things going on in Australia. I guess they just IPO'd. I'm not going to be a whole lot of help here, Elena, because I don't see much on this chart. But as far as lithium goes, here's lithium futures, and then here's the Sprott Lithium Miners ETF. We don't really track lithium anymore, and the reason is because we asked Rick about it, and he said it reminded him of uranium in 2011 when it could do no wrong, and then it did. And so after that, we just stopped tracking lithium. But if you think that lithium's going to do well, and you know, I can't tell you anything about Fuse, but as far as lithium itself, like here's a beta play that you could play lithium in the Sprott Physical Lithium Miners ETF. You know, it's just a conglomeration of a bunch of lithium miners. And check this out. We're coming up on, what would that be, like a quadruple bottom right here? The one that kind of has me concerned is this one day on December 5th, it shot below that and then went back up. So maybe that was an anomaly. One guy selling a lot. But is kind of a compelling entry point, you know, if you believe in the uranium or the lithium narrative. You know, low stochastic, low MACD, lowish RSI, might make for an interesting entry point. We just don't follow lithium. And Topper has been pounding the table for the last couple of weeks in the comments that Sandstorm is a buy. I forgot to bring it up last week, which would have been kind of interesting. But yeah, called the Topper right here in the Fibonacci. You know, just run this retracement. It was hitting right in it. Looked like Friday was a pretty good entry point. Monday was a pretty good entry point. Shot up a little bit and then came right back down for a reversal bar to the downside. Looks like it's going to come down again, so that may create another entry point in here. We asked Rick about this one, and without going into too much detail, he basically said he didn't own it and he wasn't interested. We had a position in this. This was the day we asked him about it. So we ended up selling our position for, I think, an 8% gain. And we're not in this one anymore, but nice catch there, Topper. And Keystone wants to know about the Sprott Nickel Miners ETF. We have this one. We started buying it shortly after the IPO and pretty much did nothing but disappoint and go down. They paid a dividend, pretty juicy dividend, actually. That brought the share price down. We bought one more position. Well, we basically doubled our position. So if we bought 100 shares here and 100 shares here, then we bought 200 down here. We essentially doubled our position. Coming into an interesting technical entry here. I don't know how much you can go by the technicals on this one, Keystone, but if they're worth anything, it is a double bottom. It's looking like it's going to go up. And if you believe in the battery metals narrative, they're not going to do it without nickel. So place your copper bets and your nickel bets. And remember, just like we learned with uranium, you want to hold this stuff at least a year before. That way you only pay 15% tax instead of, 25 or 40 or whatever your tax rate is, right? So you got to start placing your bets now for things that you think are going to do good a year to 5 years from now, right? Okay, so that's NIKL. And then Scotty wanted to know about CRSP. I'm not really sure which one you're talking about here, Scotty, because this is therapeutics. And then this is where we need the full company name. So I'll just show you what I mean here. CRSP. Okay, which one is it? Like, here's an oil and gas one. Like, are you talking about the energy one? Put the full company name, and then we'll pull it up next week on Monday Market Moves. And then Nielsen wants to know about Scotty Resources. So I didn't know you had a gold company here, Scotty, but it looks like you do. As far as an entry point here, Nielsen, the one that I see, basically what we got to kind of do, the small market cap, I think this thing is worth like 50 million. Let's see. Yeah, 50 million Canadian. Okay, so very small market cap, limit orders only. No market orders, but if I had to place a limit order on this, it would probably be in this range right down here. See how much back support we have right around that, what is that, 16, 17 cent mark, something like that. you know, I could draw a Fibonacci in here, but I really don't think that applies too much on such small market cap. I mean, when you have like shoot to the upside, that's just one guy buying, you know, he's buying a lot of shares, but you know, that's just one guy doing it. So, you know, I would, 16, maybe 15.50, 15 and a half cents, something like that, to 16 and a half cents, I think would be kind of a smart place for a limit order. All right, he also wants to know about newfound gold. So this one looks pretty interesting here. We've got a lot of back support right around where it is now. If we're right about the dollar getting stronger, then that will bring gold down, which should probably bring newfound down. But we do have quite a bit of back support right around where we are now. Maybe you get lucky and you can put one in for like 325 or something like that. I would watch gold on this one, Nielsen, and if gold goes down, this is likely going to go down even more, and you might be able to get it just a little bit cheaper. But as far as on the technical charts, you know, it's kind of looking pretty good. Market cap is almost 600 million, so you can almost put a market order. I wouldn't. I would still put a limit order. You know, if you want to buy it at that moment, like let's say this, you log in on Tuesday and the stock price is right where it is now, 331. Then just put a limit order for 332, and it'll fill it at you know, below that if it's available. But I would not do a market order on this. I would only do a limit order. All right. Well, I hope you guys got something out of that. Upcoming guests, we've got Alex Black from Rio 2 and their Phoenix Gold project down in Chile. They just got some government restrictions lifted, and so it looks like it's all systems go down there. And we also have my mental coach coming on the show to talk about how to get mentally clear when you're doing stocks and trading. Thank you for tuning in. Hit the like and subscribe and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.